Good afternoon and welcome to another iteration of the Global Alpha podcast with myself and special guest Kai today.
Hey guys,
how are you going, Kai?
I'm good to be back.
Glad to hear it. A little bit of a mixed week to talk about from the past and current week coming forward. Really a bit of mixed political instability from multiple places around the globe. So we'll definitely be talking a bit about that and what it could potentially mean for markets. We've seen a bit of momentum on the tech space as well, which is always good for MPC investors. And really the Fed's decision as well will be something that Kai is going to be touching on later.
Yeah, I think definitely in the next couple of months there's going to be some big decisions from the Federal Reserve, and most of them have been announced or been expected in the markets where they are looking to do rate cuts. So I think Powell's given in to Trump's pressure, and we are going to see some movements in rates.
Usually a good thing for property investors and potentially the share market as well, I believe.
Yeah, and it'll be interesting to see how it affects REITs. They generally when the rates come down, that's a positive for REITs.
Yep, and the yields usually go up accordingly.
Yeah,
absolutely. So just moving on.
Mm-hmm. Go ahead. I think in terms of macros, we are seeing a bit of geopolitical instability, especially in Europe, where there's a bit of protest. What have you been saying in Europe, Richard?
So we're seeing France have a fair bit of political instability over the last week. Protests, as the French do, have been escalating to levels we haven't seen for a few years now. I believe there was a ousting of a Brazilian leader as well earlier in the week, and he's been sentenced to up to 27 years in jail. So there's a lot of instability around the world. Nepal's been seeing a lot of drastic protests this week. We've seen some violent political killings in the US, and the Middle East, still ticking along as it has. So I think that is definitely the theme of the week to talk about. That'll have the most effect on markets overall.
Yeah, and an interesting thing that's come out as well. I think the US is actually shifting away from the Asian and Russian focus, and looking more towards their own backyard. Where, of course, with Venezuela, it's been a spot for turmoil. I think there was. I think it was last week that they were targeting like cartel boats that were shipping.
Yeah, there was a blockade that they put on the country just to keep any ins and outs kept to control, which is very interesting. I don't know if they're going to actually land on the soil, but the boats were definitely there to, curtail any comings and goings from the country.
And I think Brazil's an interesting one as well, as you said. Obviously traditionally they've been very US centric with under Bolsonaro, but now the government's changed. I think they are pivoting towards the BRICS nations. So
we've seen them sign the BRICS agreement. I think
correct.
It was a fair bit of time ago now, but definitely sort of swaying towards that side of the political spectrum.
Yeah, and like soybeans, I think they were saying about 70% of imports of soybean actually come from Brazil to China now. Traditionally, I think Chinese used to buy most of the soybeans from the US. So obviously, given the tariff wars, we've seen a bit of a shift in supply chains more towards China.
Absolutely.
Yeah. So, okay, well, I guess moving on from the geopolitical and macro stuff, any interesting stuff on the stock front?
So we saw, we've been speaking about traditionally September being a weaker month, but we've seen sort of tech hit new highs really following on from the start of the month for this period. Really strong earnings, I think, are the best way to see that share price propulsion. Oracle, its actual earnings weren't that positive, but the guidance was very positive. So we've seen, a bolster return on that business, as well as Broadcom that we've spoken about before in terms of that earnings. Micron's coming up in 2 weeks. We've seen a real big push on the share price without any real catalyst besides the Oracle performance up to date. So I think very confident on Micron's reporting and that AI space. And when I say the AI space, I'm not talking about your main producers like your Nvidias and things like that. We're looking just outside of that realm. Micron being a major RAM producer, so it is a picks and shovels play to a degree.
Yeah, and I think Oracle gets a honourable mention with their earnings release, and
Yeah.
this is one where we actually picked up a bit earlier, where we were talking about it because obviously the cloud space is the most competitive at the moment because you got Azure, you got AWS, who originally dominates that space, but over the last couple of years, actually, we're seeing Oracle really focus on that space, right? And I mean, in terms of what's required at the moment, a cloud infrastructure where whether you're hosting new services that are built on AI and all that stuff, this base infrastructure is really crucial. And I think it's a really smart pivot from Oracle.
Yeah, and we've seen that return, result in the share price. I think investors that were already in Oracle will be very happy with those results that they've seen to date.
Yeah, what's that? Revenue grew by 1,500%.
Absolutely. And I think after
Crazy.
their earnings, the share price jumped up to 30%. So that's a pretty drastic on-market move
Yeah.
from, a larger established company is what I
And I
call it.
and I guess looking at that forward projection in terms of the revenue expectations, that it doesn't look like they're stop. Well, it doesn't look like the growth will stop anytime soon.
No, that momentum is definitely there.
That's a good one.
So it's definitely an exciting space. Look, unfortunately, we didn't have a direct global alpha recommendation, but we have had Oracle as a recommendation indirectly through our structured products and things like that. But it really bolsters our confidence in sort of those just outside the main FANG stocks of the your Microns, your Broadcoms. Broadcom now is considered a FANG stock, but the ones that are just outside of everyone's sort of understanding and knowledge.
You're still fairly bullish on Broadcom.
Yeah, I think we'll see, just down to where it's positioning and the different agreements that it is working on at the moment. I think that we'll see more propulsion on that price. Same with Micron. A lot of people sort of were pegging it as a dinosaur of that space. But with RAM being so heavily demanded at the moment, particularly with data centers and things like that, I just thought it's a really good business to be picking up that's established. It's not going anywhere. And, we've seen in the last week or so those results come in.
Yeah, absolutely. I mean, you still need the raw compute, right? So, like with all these data center infrastructures, if you're putting servers into these data centers, not just for AI, but for just traditional compute, RAM is incredibly important. And I think Micron serves a good part of the market.
Absolutely.
Cool. All right, let's move on to the heat map. The green and red spots.
Definitely bit of a mixed bag there, as we can see. Tech's definitely led the charge in terms of the green. We've seen Amazon's off a little bit, Apple's off a bit, but you see Broadcom, Google, Nvidia, they've done quite well. And really, I don't think the market's really decided where it wants to go with everything else, but tech seems to be moving in that green direction.
Yeah, I mean, two notable mentions. Tesla. Wow, what a recovery.
Yeah, very impressive.
Yeah, I think I'm fairly bullish on Tesla. I mean, it transforming from traditional EV space, which obviously that's how they're founded and their main focus. But there's a lot on board for Tesla in terms of robotics. And what was the other day that they came out with? Elon's going to have $1 trillion a day payout.
Yeah, that was a couple of weeks ago now.
Yes. Big things ahead.
Definitely one to watch. For me personally, I'm just going to wait. I think there's a little bit of political dogma that Elon could get involved in at the moment that could potentially, scare away investors in the short term. But long term, I'm very happy to be buying Tesla.
He just needs to stop talking in the media. That's all.
I think this is the worst week for that as well, with everything that's happening in the US.
Yes.
I know he was, fairly close to certain individuals in the States, and he's going to have different opinions about what's happened and what he wants the outcome to be. So I just feel like for now, personally, I'm just going to be holding off. But
Yeah.
long term, definitely like the stock and like what they're doing.
That's a good point. Hopefully, he can keep his hands off the tweet.
It's already started today, so he's said a few things about what his thoughts on the shooting of Charlie Kirk and things like that. So I feel like it's not outside of his realm to say some things that could stir up the pot.
It's fair enough. Fair enough. No, good to be seen. Hopefully, he doesn't say something spectacularly controversial.
Absolutely, and it's a controversial subject at the end of the day.
Exactly. All right, moving on to rate cuts. I think this is kind of the it's been pretty much priced into the market. Look, a couple months ago, obviously everyone was debating whether the Federal Reserve should remain independent. Of course, it should, but I think obviously given the circumstances, there's a lot of pressure on Jerome Powell to cut. And with the weak economic figures that have come out, I think there's a high likelihood that we will see probably up to 2 rate cuts in the next couple of months. So basically, in terms of the WIRP curve, which is the interest rate futures expectations, there's a 96% chance of a cut in September, and then basically in October, a follow-on 25% cut, a 25 bip cut is very likely.
Yeah.
So yeah, I think as we mentioned before, should that happen, it'd probably give the economy a little bit of stimulus, and also REITs will probably be the best to benefit from that.
So do you think that would curtail any September pullback?
Be interesting. I think traditionally it's been obviously very weak seasonally going into that. But we've got to be mindful that they are cutting on the back of poor economic data, right? So I mean the job rates that came out and non-farm unemployment, they haven't been strong figures. So I think even despite these rate cuts, there's a chance that the market could correct itself in the next 2 months. So it's not without its risk of downside.
Yep, absolutely.
Nice. And then
So we've got a light earnings schedule this week. I feel like we're in the break period between earnings 1 and earnings 2 of the 2025 year. So, we've got FedEx, which is a larger company, General Mills, FactSet. Not really anything that we're interested in for this week. So it's a bit of a break week in terms of earnings for us. We're not big on marijuana companies. We're not really too big on logistics companies. So we're just going to be leaving this earnings, but looking closely to next week, where I believe a lot of the tech companies will be initiating their earnings again, like Micron and so on.
Yes, so I think fairly quiet in terms of earnings release.
Particularly for us, we haven't bought a marijuana company. We're not really buying much food supply, and FedEx is not something that we're interested in. FactSet was something I was briefly looking at, but don't like the data space.
Actually, funny enough, that's actually the first company I used to work for.
Oh, really?
Yes. I think they've restructured actually quite a lot over the last decade. They are a bit more competitive in the data space now. So obviously, traditionally, it's Bloomberg, Reuters, and FactSet. No, they're doing some good things. I think their enterprise solution is actually quite good. Their workspace is not good.
My ex-employer was a partner with them for their platform. So I'm very familiar with their product.
Yeah.
I don't see an issue with it, but I just feel like it's not an area that I have a lot of knowledge in. So it's not something that I'd be recommending.
Yeah, interesting. All right, I think that pretty much wraps it up for the week. Any golden nuggets to look out for the following week?
Not really. I think the best thing for clients to do would be to subscribe or become a Global Alpha member so that they can get the real-time recommendations from us, whether that's via text or direct contact from one of our advisors. They're really the clients that are doing best in terms of returns on this advice. And, you got the benefit of us being up at night in the US market, actually trading it for real, not placing it within the Aussie market time frame. So, I think that's the best way for clients to take advantage of this knowledge that we've been providing.
Very nice, Rich, doing the graveyard shift. But mate, you've been killing it. So spectacular trades.
A lot of 11:30s till 3:30 a.m.s, but it's doing well for clients, and I think that's the best way. Particularly if we're doing a purchase, you've got to see what the market's really doing.
Yep.
And a couple of dollars here or there can be impactful. And I think if you're up when the market's actually trading, you're going to get the best feel just based on what you're seeing, rather than placing it and waiting for the price to hit what you want it to.
Very nice, very nice. Well, if you like what you see here, please sign up for the Global Alpha. It's a fantastic product. So, yeah,
absolutely, and I think the results speak for themselves.
All right. Okay. Well, stay tuned, and we'll be back next week for more.
Thank you. Take care.
Cheers. Bye.